Welcome to episode 257, Steven Cohen, 6 Lessons on Insider Trading. This is an outline of episode 257. Lesson number 1, 70% of his trading profit came from insider information. How did I come up with this estimate? No doubt Steven Cohen is a great trader and he would probably have returned 15% a year without insider information. This I got from estimating his earning between 2013 and 2017.
But among the new breed of hedge funds, Cohen's returns stood apart, and so did his fees.
He had an incredibly aggressive fee structure. The standard in the hedge fund industry is what's known as 2 and 20. That means you charge 2% of the assets you have under management and 20% of any profits. Cohen charged 3 and 50, meaning 3% of assets under management and 50% of any gains. And the reason he could get away with it is really, really simple. His track record, his performance were amazing, and everybody wanted in.
Cohen's strategy was to get as much information as possible to have an edge, to be able to, make money either on the upside or the downside, depending on how a company's earnings come out.
People were throwing around this term edge a lot, which essentially means, what's your information advantage in the market? What do you know that other people don't know? People were talking about this very openly, without any shame.
Lesson number 2, Steven Cohen is Mr. Slippery. The government won 50% of the time, Cohen won 50% of the time. Ironically, Steven Cohen learned to be cautious with the SEC in 1990 when his first and ex-wife Patricia Cohen was informant to his insider trading in the 1985 involving GE's purchase of RCA.
Seemed too good to be true.
He takes 50% of the profits, and then he returns even after that, like 30, 40, 50, 60%.
So in order for him to return to you a 50% profit, he has to make 100%. He has to double money.
Yes. And it averaged for many years 30% after expenses.
After expenses, to deliver 30% to his clients.
That's over time, is huge.
Means he's making more than 60% on the money he's managing.
Now you know how you go from 25 million to 9 billion.
How does anybody make 60% a year?
Well, the feds are asking that right now.
Lesson number 3, the expert network. These are the intermediaries between the hedge funds and the companies.
The FBI refocused their investigation. Informants had pointed them toward independent research firms, known in the industry as expert networks. There are about 40 expert networks operating nationwide.
I think it's pretty volatile.
Independent of the traders and with almost no regulation, they can act as matchmakers, putting employees inside companies on the phone with big investors like hedge fund portfolio managers.
That sounds good. All right, thanks.
Now, there were rules, and even the expert networks knew that there were rules as to what the public company employees could and could not speak to money managers about. So you might be able to give a broad view on, say, a product that your company might be developing, but you can't tell the portfolio manager, what the upcoming quarter is going to be. And of course, these Wall Street money managers, they wanted as much information as they could possibly pump out of these public company employees.
So you had a lot of hedge fund guys calling up middle managers at manufacturing equipment firms, asking them about their orders or their pipelines or how many trucks are in your parking lot. They had portfolio managers talking to doctors, researchers at drug companies to explain about the development of a particularly hot new drug. Then you had the hedge fund investors paying a lot of money to these expert network firms who would then pay these consultants.
Lesson number 4, tagging. This is a practice at S.A.C. whereby the traders rate their own trade conviction from 1 to 10, 10 being the highest. Tagging insulates Steven Cohen from the traders who obtain insider information, the who and where. It is one of the reasons the SEC was able to indict S.A.C. traders but unable to indict Steven Cohen.
He tells the FBI that to do business and succeed at S.A.C., it was understood that you give material non-public information.
The way S.A.C. works is that these traders operate in pods, and they're very independent. There's not a lot of oversight. And if Cohen likes one of your ideas and puts it in his portfolio, then you get a percentage of his profits as well. So if you were a cynic, you would say the incentive for people at S.A.C. is to do whatever they can to make money, and Cohen doesn't have to know about it.
The practice of tagging was abandoned in Steven Cohen's new firm, Point 72. Lesson number 5, The Person Book, Profit and Loss, and Sunday at Hampton. I will go over each one. The Person Book is where Steven Cohen kept track of his best traders based on profit and loss. Often took place at Hampton House, his vacation house in Long Island, on Sunday. Tagging is where the traders handed Steven Cohen their recommendations. The Person Book, The Profit and Loss, is how Steven Cohen gave out special bonuses to his traders. An example is Matthew Matoma, who was given a bonus of $9 million for insider trade of an Alzheimer's disease drug. Lesson number 6, Pay big commission, get first call. Big commission is easy to understand. First call is a bit hard to understand because first call is a Wall Street jargon.
Hedge fund traders also exploited the fact that they were very popular with stockbrokers on Wall Street.
The reason why Wall Street loves these guys so much is because they're trading every day. So the market activity they generate is immense. And as they're trading so much, they're giving the Wall Street firms commissions. As the Wall Street firms are getting commissions, guess what? They give the hedge funds their best information.
And more importantly, they would get the information first.
The more commission you pay, the better service you're going to get.
In the industry, it's known as a first call.
You need that first call, and you're going to pay for it. If you're
Recognizing that, Cohen was willing to pay brokers big commissions.
The rumor about Steve Cohen was always that he paid exorbitant commissions in order to be the biggest fee payer on Wall Street so that he could get advance word about upgrades and downgrades.
And I've heard many, many stories of bankers saying to their traders, if Stevie calls, you drop everything. He is our best client.
Thank you for watching. Please subscribe and leave your questions and comments below. My next video will be 10 trading rules of Steven Cohen. Wishing everyone peace and prosperity.